This morning, we welcome Bob Takai, who's the general manager of Sumitomo Corp, which is one of the biggest commodity traders in Japan. Bob, nice to see you in the year 2010, and Happy New Year to you. Let me just ask you about this gold hedging at this point. I mean, what do you make of this fall in gold hedging? What does this indicate, that there is no more appetite for gold going forward?
Well, I don't think so. There is still a lot of appetite in the gold market. The last time I was here 2.5 months ago, I think it was in the beginning of December, just a few days after the gold hit the record high of 1225. Since then, for the last 2.5 months, we had 3 shocks in the gold market. The first one is a Greek shock. As many people say, it's a Greek national debt problem. And the second one is Obama shock, which was in the middle of January, that Obama administration is going to tighten the banking regulation on the prop trading. And the third one is a China shock in the beginning of February, that Central Bank of China tightened the credit within the market. But the gold survived all these 3 shocks. However, it dropped $100 from the 1150 level that the last time I was here. But it came back by about $70 to $80. And this morning I saw 1128, 1129, the spot gold price.
Hey, Bob, let me just ask you, those scenarios you just highlighted, like the Volcker rule that you pointed out, the Greece concerns, and also the China risk. I mean, don't these usually push investors to seek safer havens such as gold?
Yeah, well, basically, the major reason for the gold investment for the last 2-3 years is a long-term dollar-weak trend. However, in the beginning of December, because of this credit problem in Greek, the dollar trend has turned. If you take a look at the dollar index, which hit the bottom at 74 in the beginning of December, now it's standing at 80. So clearly, this weak dollar trend has turned. However, there is a consistent demand in the gold market. And I think this is coming from a currency viewpoint. If you take a look at the gold price in the dollar terms, it's 1128, down from the peak. But if you take a look at the gold price in the euro terms, it's 830. And this is now a record high from a euro point of view. And this is the same thing for the sterling. And what's happening is the people are now shifting their portfolio from those multi-currency to the gold. So from a currency point of view, gold is still favored by many investors in the world at the moment.
Okay, Bob, well, that makes an interesting point then, doesn't it? I mean, should you buy in euro or should you buy in US dollar right now for gold?
Yeah, well, people who don't trust the fiat money, those are the people who are now trying to buy the gold. And now it's very good time for these people to buy, because it's in a correction phase in the gold price. So I think, this bull trend is going to continue for the rest of the year.